Review of the U.S. stock market. America opened in the first half hour of trading without a single dynamic, but it all boils down to the fact that the bears are more likely to take the dominant position. The stimulus package was included in the quotes in advance and is not particularly fuel for growth now. You can find out more about what is happening in this overview. S&P 500 Index. This is now the situation for the S&P 500. Shares of companies in the tech sector continue to trade in the red zone, when the stocks of companies in the industrial and real sector are growing. This situation has been discussed many times, but I will briefly remind you what is what here.
Despite the pumping of capital, the business of technological problems does not experience problems and, on the contrary, will go further, but the companies of their real sector are increasing debts and experiencing problems.
I think it's clear where to focus. Coca-cola shares. Coca-cola shares opened with a big gap. The company's quotes continue to smoothly recover within the trend channel to the highs. The cola business has suffered mostly in part. Nothing affected the demand for the popular drink and sales are still high. The main interest in cola shares should be due to the dividend policy, which gives all investors confidence in their stable payment. A classic value share that you can still take. I have recommended them even earlier for better prices, but now they can still be accessed if prices fall below $51.
Of the competitors, only Pepsi-Cola can stand out, which can also become a good contender for a purchase, but the entire world market for such companies is oligopolistic, and therefore it gives confidence in the stability of the brand and the Centenary Corporation.
Visa shares. Also a good option for investment is Visa shares. Global payment system, and I am sure that you or someone in your environment used its products. I would like to emphasize that this is a long-term investment, so I immediately showed you the monthly chart for clarity. The highlight is the same as with cola. Stable security, dividend payments and growth of stocks are really sky high, albeit with drawdowns.
Their competitor is doing well too, so we will also consider them for purchase.
In the short term, the Visa cannot yet break the resistance level of $220. Perhaps they will succeed soon. But the prospects for the company are very excellent. Their only competitor is their own domestic competitor. The world and other regional payment systems will not be able to compete with them, and this is great for shareholders. Mastercard shares. Well, no matter how trite it might sound, the situation is similar for Mastercard. I will repeat myself perhaps, but I will convey it intelligibly. If you came to the stock market in order to have a stable growth in hard currency, then these two companies are what you need. These payment systems cover the whole world, and only in China and the Russian Federation they are opposed by regional systems, and basically UnionPay can oppose them. Therefore, this is the main argument in favor of the assertion that nothing threatens the growth of shares in the quotations of Visa and Mastercard.
A very similar dividend policy, very similar growth charts, even the movement of shares is synchronous, so I can safely recommend both for holding, but for a period of at least a year.
Review of commodity markets. Commodity markets make us happy too. Oil prices jumped above $71 per barrel, and although it is said that it happened because of the attack on the Saudi Arabian oil facility, we saw that prices even before the attack were quietly moving towards the target figures in previous reviews. What happens to the rest of the assets and the details of oil you will find out now. Oil Brent. As I predicted the movement with the trend.
At this stage, they begin to fix the price, because the price is with a round value, but then you need to look further at the situation, and then take decisive action.
I quite expect the conquest of new peaks in oil, because Saudi Arabia refused to increase production, as well as the OPEC meeting. If this continues, oil prices will continue to rise unless other factors prevent it. Everyone who entered on the previous signal has probably already exited with a profit. My recommendation with oil is not to go against it for now. Short selling is tempting, but it killed a lot of people, so remember that trend is your friend. Gold. Gold closed last week in the form of a doji, a Japanese candle of uncertainty. Someone at support levels and trend lines uses it as a signal for buying, but in this context it is a very weak signal and I would not recommend entering it. Gold can drop even lower and most likely they will. Look at past sales.
If we also take into account that the dollar is strengthening on all fronts, then in this situation gold still does not look attractive for purchases. It is necessary to wait for either new fundamental factors, or signals at the support level, which I marked on the chart.
Let me remind you that in the long term, gold can save you from inflation. Platinum. Well, now to the specifics. What kind of deal can you make now? A new opportunity for platinum is planned, but I say right away that this signal would not suit me personally. Timbers are good, but here it came out very short, which is not very good. You can also enter on short ones, but since this signal is not strong, my recommendation is to calculate a smaller amount for the risk than usual.
There is a signal and it is not weak enough to let it pass, but here you need to risk the wrong amount, where we risk on signals with more confident outcomes. In any case, if you are not ready to take this risk, then you can skip this entry, but I would enter, albeit with less risk.
Let's say from 1-3% on a deposit. Forex market review for March 9th. Stock markets were declining yesterday and the dollar continued to strengthen in all positions. How the stock market affects the foreign exchange market, as well as how to make money on such movements, you can find out now. Currency pair EUR/USD. I marked the next target for the euro-dollar on the chart. I expect further strengthening of the dollar despite the adopted package. According to various estimates, real infusions can begin only in April. The strengthening of the dollar shows a negative situation in the stock markets. At this stage, the dollar is strengthening only for the reason that many market participants fix their positions and transfer money into a reliable, in their opinion, fiat currency, namely the US dollar. Therefore, from the very beginning, we were right when we talked about the slow depreciation of the dollar in comparison with other currencies. I would not risk my money on this currency pair, but I looked at its behavior in order to find out in advance exactly how trading on the stock markets will be conducted. USD/JPY currency pair. Yen is heading in the same direction as yesterday. What does the RSI indicator show us in this case? Take a look at this. It seems that you need to enter the short immediately, because the indicator shows overbought and that is why everyone who uses indicators blindly will lose money. RC and any oscillators will never give normal signals when the price is trending. Remember once and for all that these indicators are not used in trends. As you can see from the chart with the indicator, the price of our currency pair continued to go even higher and higher and it does not care what the oscillators show. Therefore, in the case of this currency pair, we just remember that you should not rely on oscillators in trends. This also applies to the stock markets, by the way.